You're listening to AI Prism from Seoul Economic Daily. Samsung Electronics just posted an 83% memory operating margin, and Wall Street is split on what to do with it.
Morgan Stanley says underweight semiconductors. JPMorgan says buy the dip.
Yen shorts just hit a 19-year record, signaling sustained dollar strength that raises your cost of Korea exposure.
MEA and while 99% of KOSPI large caps are trading below analyst targets, bio and battery at 50% plus discounts.
Here's what the data says about your Korea allocation today.
It's Wednesday, July 8th. Here's why global investors are paying attention to Korea today.
Big tech data center commitments of $848 billion this year alone have concentrated global capital in AI semiconductors, leaving bio, battery, and consumer electronics in a liquidity vacuum.
Japan's central bank remains behind the curve on tightening despite record speculative yen short positioning, while Fed Chair Kevin Walsh's price stability stance reinforces dollar dominance.
Samsung Chairman Lee Jae-yong departed for the Sun Valley Conference on July 7th to negotiate large-scale foundry contracts, adding an event-driven catalyst to Korea's semiconductor story.
Here's what the numbers show.
Samsung Electronics posted 89.4 trillion won, roughly $58.6 billion, in Q2 operating profit, with memory margins at 83%, above Micron's 81%, establishing Samsung as the global swing producer in DRAM.
Analyst consensus puts Samsung's Q3 operating profit at 110 trillion won, around $72.1 billion. Rising to 120.8 trillion won in Q4.
Morgan Stanley projects 2026 global AI capex at $805 billion, yet recommends underweighting semiconductors, citing Meta's surplus compute capacity as the leading demand throttle signal.
JPMorgan rates the recent chip pullback a tactical buy, arguing new memory supply cannot come online before 2028, with big tech data center spend already at $848 billion this year.
138,000 CFTC yen short contracts as of June 30th, a 19-year high, alongside $40 billion in dollar bullish bets, signal sustained carry demand that raises Korea's FX hedge cost.
Japan's 30-year bond yield hit 4.105% intraday on July 7th, approaching its May record of 4.2%, as fiscal credibility concerns continue to weigh on yen stability.
SpaceX's NASDAQ 100 inclusion triggers an estimated $27 billion in passive inflows this week, effective July 7th, reshaping U.S. tech index weights at the margin.
136 KOSPI names, 99% of tracked large caps, trade at target price discounts exceeding 50%, with L and F at 135.5% and POSCO Holdings at 81.3% below consensus.
So what does this mean for global investors?
Earlier, we flagged Samsung's 83% memory margin. That number confirms the Korea semiconductor earnings thesis. But position sizing now hinges on the Morgan Stanley JPMorgan divide, and TSMC's June revenue release on July 10th is the data point tiebreaker.
The yen short at a 19-year record signals sustained dollar strength. A tactical FX hedge cost consideration for Korea exposure, not an exit signal.
Bio and batteries 50% plus target price gaps represent the clearest sector rotation setup in the KOSPI. If AI capital concentration begins to unwind in H2.
That's today's AI Prism, Global Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Juan Ifra award-winning series. We'll be back tomorrow. You've been listening to AI Prism from Seoul Economic Daily.